Hello friends, welcome to Hemant YouTube channel. Before entering into the topic, if you like my video, please subscribe, share and thank you. Let's dive into the topic. So, today we are going to learn SBP with cash settlement. What is the meaning of SBP with cash settlement? For example, a company came to you and said that some are asking ESOPs, some are asking stock appreciation rate. What to do? He said. Then you said that give both ESOPs and SAR to employees and give an option to employer what to excess. So then immediate last, what is the accounting treatment for this? So in this video we are going to learn what is accounting treatment for SPP with cash settlement. So SPP with cash settlement is nothing but giving an option to employee to access either cash equity settled SBP or stock appreciation right. So what is the big challenge in this? Big challenge is how much SBP reserve need to be maintained and how much SBP liability need to be maintained. For example, that person has said that 10,000 ESOPs we are giving or 12,000 stock appreciation right they can access. So how much SBP liability need to be recognized, how much SBP reserve need to be recognized. An entity cannot know how much what an employee excess because they cannot keep poll know how much what you're taking them what you're taking. Even though they have taken the poll, it may become wrong because of at excess price the mindset of the employee will be different. So they cannot say 50% this 50% this. So what is the accounting treatment for this? So usually it consists liability component and equity component. What is the meaning of liability component? It is nothing but stock appreciation right, and equity component is nothing but equity settled SPP. So one assumption we have to take. That is, first we have to recognize total stock appreciation right. That is, we have to assume that all employees will exercise the stock appreciation right, and difference amount will be recognized as equity. I think you have not understood because two doubts will come here. Why we have to recognize fully liability and later on equity? And second, you need some clarification. So let me explain detailedly. Suppose a company came to you. We said 10,000 ESOPs or 12,000 stock appreciation right, and they have said that my fair value of this is 90 and on excess date same will be 90, but on later year it changes to 100 110. You know all we all know that in stock appreciation right we'll consider fair value of the option. In equity settled SPP we will not consider. So how much we have to recognize? Whether we have to recognize 10,000 into 90 divided by 3 or 12,000 into 90 divided by 3. 12,000 into 90 divided by 3. How much need to be recognized? We don't know. So we assume that all employees will take this. So 12,000 into 90, and later on that will be reduced from 10,000 into 90 and excess amount will be recognized as equity component. So why we have to take this assumption? We know conservatism concept. In conservatism concept they will say that we have to show maximum liability. That means any liability in future, any liability occurs that need to be recognized, that may be probable, that is not that may be probable. So here we are recognizing SBP liability account. So fair value of the plan, fair value of liability component, fair value of equity component. So fair value of liability component is nothing but stock appreciation right, number of option granted 10,000 into fair value of plan under cash alternative 10,000 into 90, and fair value of equity component is total fair value under equity settlement minus fair value of liability component. Let me explain with an example. Suppose ABC Limited is there. It has given two key managerial person that either you can exercise stock appreciation right of 1000 shares to take either cash equivalent of 2000 shares or 1500 shares. The minimum service requirement is 2 years and shares being taken must be kept for 3 years. They have said that minimum service requirement is 2 years and you can take cash equivalent to 1000 shares or 15,000 shares you can take. So first is how much stock appreciation right need to be recognized. 1000 into granted fair value, that is share alternative fair value with restrictions. So 10,000 into 113 need to be recognized. So 1000 into 113 need to be recognized, and 1500 into 102 minus 1000 into 113 need to be recognized for equity settlement. Why this? Because we have recognized we have assumed that if an employee takes total stock appreciation right, this much expense is recognized. But for example, if he has taken equity, yeah, he has to pay 1500 into 102 where expense are more. So for that we are going to recognize equity component. So how much expense need to be recognized? 1000 into 113. 1000 into 113 for cash for cash settlement equity, that is nothing but stock appreciation right. So 1000 into 113 is 1,13,000 need to be recognized, and 1500 into 102 1,13,000 minus 1,30,000. So that much need to be recognized. So see, total equity alternative is, that means 1500 into 102 is 1,53,000, and cash alternative is 1000 into 113, that is 1,13,000. So difference is 40,000 as equity option. So this much expense need to be recognized. So all we all know that in cash stock appreciation right, we are going to consider fair value, but in equity component we are not going to recognize. So the problem is here we have taken 113 for first time. Later on any fair value change we have to take here. So you see here it became 120. So 1000 into 120, 1,20,000 divided by 2, 60,000. Like that every time we have to consider the fair value. See here, fair value they have given as 120. Next later on 1000 into 132, that is 1,32,000. So equity option will not change. So 40,000 divided by 2, 20,000, 20,000. So expense, total expense is 80,000 for the 31st December 2001, and 31st December 2002 is 92,000. And they have given that employees exercise their cash option at the end of 2002. They said that all the employees are option as exercise stock appreciation right. So journal entry will be for this year is employee benefit expense account data to 80,000 to SBP reserved account 20,000 to SBP liability account 60,000. So total this much will be recognized. And later on at the end they said that all employees has exercised that stock appreciation right. So 1000 into 132 already recognized in the books 1,32,000. That means 1,32,000. So 1,32,000. So difference amount will be recognized. No. See, employee benefit expense account data to SBP reserve account to SBP liability. We have recognized 92,000, 20,000, 72,000. So we are going to transfer this SBP liability account data to equity share capital account as employees has exercised the option. So SBP liability account data to equity not to banker cash 1,32,000 will be recognized. And you may get doubt what this 40,000 will be done. This 40,000 will be transferred to reserve, to general reserve. That's it. If you like my video, please subscribe, share, and thank you.